If you hold XRP, or you're even thinking about entering the market, you need to hear this. Make sure you like this video, subscribe, and turn on notifications because today's update is one of those moments that separates informed investors from emotional ones. Over the last several days, we've seen mounting pressure building around liquidity positioning, exchange flow shifts, and regulatory tone changes that are quietly reshaping the short-term outlook for XRP. On the surface, it looks like volatility. Underneath, it's something deeper. Here's the problem: liquidity concentration. Let me explain. When large wallets, and I'm talking institutional-scale wallets, begin repositioning XRP across exchanges and custody solutions, it creates two immediate effects. 1. Price instability in the short term. 2. Psychological pressure on retail holders. And we've just seen a wave of large-scale XRP movements that triggered exactly that. Now, before panic sets in, understand this. Large movements don't automatically mean dumping. But they do mean preparation. Preparation for what? That's the billion-dollar question. Some analysts believe this could be positioning ahead of a major liquidity event, possibly tied to institutional settlement expansion. Others argue it's strategic rebalancing ahead of macro market shifts. And then there's the uncomfortable possibility: short-term downside pressure engineered by liquidity providers testing weak hands. Look, markets are not emotional. People are. When retail investors see large XRP transfers hit exchanges, fear spreads fast. And fear creates selling pressure. Selling pressure creates cascading volatility. That volatility can then be used by larger players to accumulate at lower prices. That's the cycle. Now here's where it gets even more serious. Regulatory headlines are starting to creep back into the conversation. Nothing catastrophic, but enough uncertainty to stall momentum. And momentum is everything in crypto. When XRP begins gaining traction, any whisper of legal ambiguity can slow institutional decision-making. And institutional hesitation affects liquidity confidence. Liquidity confidence affects price stability. You see the chain reaction. This is why this moment matters. Because XRP is no longer just a speculative asset. It's positioned as infrastructure. And infrastructure tokens behave differently under stress. They don't just react to hype cycles. They react to adoption timelines. If adoption delays, even slightly, price can stagnate longer than retail expects. That's the uncomfortable truth many holders don't want to hear. Now let's zoom out. Is this catastrophic? No. Is it serious? Yes. Here's why. The market right now is in a fragile transition phase. Bitcoin dominance remains strong. Altcoins are fighting for narrative oxygen. And XRP sits in a unique category. Not fully DeFi, not fully speculative meme, but not yet fully integrated global settlement infrastructure either. It's in between. And in between phases are volatile. What we are witnessing could simply be growing pains. Or it could be strategic pressure before a larger move. Now I want to shift perspective for a second. If you were a large institutional player planning to integrate XRP into expanded corridors, would you want price exploding before you secured liquidity positions? Probably not. Controlled volatility can serve strategic interests. Again, speculative. But markets are rarely random. Here's another layer most people are ignoring. On-chain activity hasn't collapsed. In fact, wallet creation and transactional throughput remain relatively stable compared to previous downturn cycles. That tells us something important. Utility hasn't disappeared. Confidence hasn't vanished. But sentiment has weakened. And sentiment drives short-term pricing more than fundamentals. This creates opportunity, but only for those who can detach emotionally. Now let's talk about the real massive problem. It's not the transfers. It's not the headlines. It's not even the volatility. It's expectation misalignment. Many XRP holders expected explosive upside immediately after regulatory clarity improved. When that didn't happen at the speed people imagined, frustration grew. Frustration turns into doubt. Doubt turns into selling. Selling creates exactly the price behavior people feared. And that loop feeds itself. This is how markets shake out impatient capital. Infrastructure adoption does not move at meme speed. It moves at enterprise speed. Contracts, compliance, testing, scaling. And during those phases, price action can feel underwhelming. But underwhelming does not mean failing. Let me say that again. Underwhelming does not mean failing. If anything, it often means building. Now here's the fork in the road for XRP holders. Option 1. Interpret this period as collapse. Option 2. Interpret this as consolidation before clarity. Neither is guaranteed. Both are possible. But what matters is data. And the data right now shows continued development, continued global conversations around digital settlement, and continued relevance of XRP in cross-border discussions. What it does not show is abandonment. And that's critical. Because real problems in crypto look like disappearing developers, collapsing network activity, and regulatory bans. We are not seeing that. We are seeing pressure. Pressure is uncomfortable, but pressure also precedes movement. Think about every major breakout cycle in crypto history. There's always a phase where holders question everything, where doubt peaks, where sentiment bottoms, and then suddenly, narrative flips. Now, I'm not saying that flip happens tomorrow, but I am saying this period feels like a test, a conviction test, a patience test, a discipline test. And if you're still watching right now, you're not the average emotional trader. You're trying to understand the structure. That's exactly what separates long-term positioning from short-term reaction. So what should XRP holders actually do? First, zoom out. Second, monitor real metrics, not social media panic. Third, understand that volatility does not equal doom. The real risk is misinterpreting strategic repositioning as existential threat. And that's what's happening across parts of the community right now. Fear spreads faster than facts. But facts outlast fear. If this turns out to be nothing more than liquidity reshuffling ahead of broader integration phases, today's panic will look dramatic in hindsight. If it turns into deeper regulatory or macro headwinds, then risk management matters. Either way, emotional reaction is the worst strategy. XRP holders didn't just get hit with volatility. They got hit with uncertainty. And uncertainty is harder to handle than losses. But uncertainty is also where opportunity lives. Stay sharp. Stay rational, and stay informed, because moments like this define long-term outcomes more than euphoric spikes ever will. If you value this level of breakdown, not hype, not fear, make sure you're subscribed to XRP Insider Network. We track the shifts beneath the surface, and when clarity emerges, you'll hear it here first. This isn't the end of the story. It's a chapter, and how it unfolds depends on what happens next in liquidity flows, institutional positioning, and regulatory tone. We are watching all of it.